Hey everybody, Ashley Page here. Thank you so much for joining us on this week's educational vlog. We're thrilled you're with us, whether you're a client or you're just someone that follows our content. For those of you in either camp that are new to our educational vlog, what we do with that every Thursday is we do a deep dive on a term or a concept that we feel like will help you build your knowledge in money and markets. That's in contrast to the portfolio vlog that we do every Monday. The guys on the portfolio team do that give you sort of what the economic talking points are going to be for that particular week in markets, followed up on Tuesday with a lot of research from our research partners that we send you. So what we're doing today is we're doing a deep dive on one topic, and our topic today is friendshoring and emerging portfolio impact. Friendshoring and emerging portfolio impact. So right off the bat, friendshoring, what is that? It's an unusual term. Well, it lives in the same camp, if you will. Think about a U.S. auto manufacturer. And the U.S. auto manufacturer can either buy and establish their supply chain totally within the United States. Of course, we call that onshoring. Or they can establish their supply lines to get a lot of supply of product into their plant internationally. We call that offshoring. Or a company can do, like most do, a combination of the two. Friendshoring is a new term that we want you to know, because we feel like over the next couple of decades, that's going to have real portfolio impact. So that's why we want to highlight for you today, particularly what's going on with some of the political tension in the world in Russia, Ukraine, and also China, Taiwan. Friendshoring just means that rather than going to the lowest cost producer, either in the United States or outside the United States, in your international trade supply lines, what's most important to you is to choose trade with a country that's a friendly or one that is politically allied very much with us. So, for example, in the United States, that would be countries like the United Kingdom. It would be the Eurozone proper. It would be a country like Taiwan, as an example, or Japan, South Korea, Australia, Brazil. You get the idea. It's one that has political values sort of aligned with ours, as opposed to China that is not and is in a different trading type block. So let us give you a visual of what we mean. And let's pretend that for sake of this example, that our U.S. auto manufacturer is buying its navigation system overseas to supply into the plant to put into the car. And let's say historically that has been purchased from China. Now that U.S. auto manufacturing is a little bit worried with what's going on politically, particularly with semiconductors and coming from Taiwan. They're worried about the security of that international supply line now. So as an alternative, they can buy the same navigation system from the United Kingdom. Simply put, what friendshoring means is we're going to favor the United Kingdom purchase regardless of price versus the Chinese purchase. That's what's called friendshoring. That is really beginning to emerge now. We've always had friendshoring in certain industries like pharmaceuticals, rare earth metals. You've heard about that. I mentioned semiconductors and the problem that has been lately. Well, we've always had a little bit more of a friendshoring type of push on those. Now, friendshoring as a trend is becoming much more global because economists are beginning to worry that much like we had in the Cold War days, we are creating 2 or 3 large antagonistic trading blocks in the world economy. The US is one, Russia, of course, is another one, but the main one is China. So economists are worried, and with this primary point, They're worried that if we sort of go retro back to what we had in international trade that looks a lot like the Cold War, it will unwind a lot of the benefits that we've had from globalization, particularly over the last 33 years. Globalization is a much more open architecture in trade. You pretty much can buy anything anywhere. There are one-off examples like Iran and North Korea that have always been very closed. But for the most part, over the last 33 years, we've seen a tremendous expansion in how the U.S. auto manufacturers and other businesses have really spread out their supply lines. So if you look at friendshoring, let's take the globalization example and what we've gotten from it. If you go back in world history, you've had a lot of examples of globalization where that's happened. You can go all the way back to the invention of an agricultural society. Then you fast forward, a major one, of course, was the Industrial Revolution. Come forward into the 1800s, what did we have? We had railroads getting prolific along with a clipper ship, which was faster in international trade. Then you come forward to the early 1900s, you have things like the building of the Panama Canal that made international trade much faster. The major globalization trend we've been in for the last 3 decades started in 1989 with the fall of the Berlin Wall, because all of a sudden you took a major trading bloc in Eastern Europe, the former Soviet Union, that was closed to US products, really. So when the Berlin Wall came down, that was a major push in globalization. To exacerbate the speed of that, what happened right behind that, the early 1900s, the early 1990s, the creation of the internet. So you had a lot more countries coming online in terms of international trade and a faster way to do it. This globalization trend post 1989, we have really been in that trend for 33 years now, up until the present day. The major 2 factors we have gotten in terms of global wealth creation since that point. Number 1 has been that globalization has raised the income level of developing countries. A great example would be Vietnam. Their wealth has increased quite a bit in the globalization era. You did not have that before. So you've had a number of developing countries around the world where globalization has raised their income level. That's number 1. Number 2 is globalization has lowered cost tremendously for already the highly developed countries like our own in the United States. We call that the law of comparative advantage. The United States, for example, has comparative advantage in very high value products that a high innovation level, a high educational level create. Vietnam has a comparative advantage in low-cost production, for example, of commodity goods. So what globalization has done is really improved the growth of the world economy in those major camps. The friendshoring trend we see now could have a drag on that. That's why we want you to be aware of it and be cognizant of the portfolio value that it could have. If we start going the friendshoring example, let's go back to our navigation system bought from the UK, where we traditionally bought that from China. It was an adequate product and it was cheaper. Now, if we go the friendshoring direction, we're buying it from the UK, but what can happen? It's at a higher cost. So what economists are worried about is that with this new friendshoring trend, we could start to detract from the major advantages we've seen in globalization again, which is, the higher income for developing countries and the lower cost for the ones that are already developed. The World Trade Organization tracks trends on issues like this. And they say if friendshoring like this continues and we continue to polarize in our trading bloc, and China continues to polarize, Russia continues to polarize, over the next 2 decades, we could have a 5% drop in global economic output, I would say over the next 10 to 20 years. And that's significant because in terms of worldwide wealth going into our monetary portfolio system, that could be they estimate it could be 4.4 trillion with a T in terms of loss of wealth creation. Well, if that occurs, what you'll begin to see is that you'll see cost creep and sort of an inflationary build into the floor. If you start friendshoring from exclusively, even though your costs are higher, from a country like the UK, it's going to build in a little bit higher cost profile. That's the one negative trend. The other negative trend is the worry is that with a lot of these developing countries where the income level is rising, they're not going to be rising as quickly. So they're not going to be able to buy as much U.S. product. So we wanted to bring this friendshoring term up to you because over the next couple of decades, it's got the potential to really sort of depress the positive impacts we've seen with globalization over the last 3 decades. So we hope this information is helpful to you. As always, we love to hear from you. Please feel free to reach out up to us on any social media platform. We love it when you come by, just talk on the phone. You can talk to me more about this topic. Glad to answer any follow-up questions that you have, as are any of the guys from Greg to Bobby, Adam, Trey, and Ty on the portfolio team. We always appreciate the dialogue. And as we sign off here, let us thank you for forwarding this information to others. You all are doing that a lot. Really appreciate it. And until then, we hope you have a great rest of the week. Thanks.